G'day folks, Jim here from FX Charts, Thursday the 19th of December. Thanks for tuning in. Well, the Fed surprised the market today by tapering by $10 billion starting in January. Had the markets all over the place. The initial reaction was pretty messy, really. Equities took a bit of a dive before turning around sharply, and both are down. The S+P finished the US at all-time highs. The dollar initially weakened a bit, but that also turned around pretty sharply. And is higher all around, has made new highs against dollar yen and against the Aussie, so they both look in trouble still. We're going to have a look at the charts here. On the euro made a high of, it went up to 138.10.11, as you can see. Got a bit of a double top up there now, and it's since fallen pretty sharply. The indicator's pointing lower for the next few hours. I don't think we're going to see much of a recovery, and if we do, if we get back above 137, sort of 10-20 area, I think it's probably a sell. But it looks as though that's heading a bit lower, and we'll see further dollar strength. The 4-hour charts equally, they're looking a bit negative. Now we're just attempting to break through this rising trend support here, and if we do that, then I think we're probably heading back down to the sort of low 136 area. And we'll sort of sit around here, 136.15. If we go through 136, then we're heading towards 135.5, but that may be a bit too far out to contemplate right now. The daily charts, well, they're looking a little bit mixed. It appears that the indicators are rolling over, and the downside is the way to play it. So I would expect a little more dollar strength over the next coming days. And selling into rallies looks the way to go. Dollar yen, well, that was all over the place as well. Got down to 102.60 before it really bounced right up here too. It's taken out 104. It's sitting just below 104.35 highs. Now, having done that, the hourly charts, as we can see, are pretty overbought at the moment. So I would imagine Tokyo might just sort of sit around here and allow them to unwind a bit. Maybe we go back and have a look and see what 104 looks like, but I suspect now it's a buying opportunity. And really, we're in blue sky territory, and we have to go back to the weekly charts, really. And this is where we're sitting at the moment, right on the high here. And the next real resistance is the 61.8% FIBO move, the whole move down from to 123, and that comes in at about 105.25. So I can't see an awful lot standing in the way. There's not much around here to protect it. So I think possibly go up to there. I'll be taking profits on longs. I think particularly as we're getting towards Christmas, liquidity is going to be pretty thin, and you might as well lock in some profits if you've been long the whole way up. Well, we could yet go back to test sort of some of these FIBO supports down here. But below 104, 103.70 is now reasonable support, as is 103.20, 103.30, somewhere around there. Cable had some good unemployment data out today. Expected to be 7.6%, came in at 7.4%, which is heading pretty rapidly towards the MPC committee's benchmark of 7%, whereby they have stated that they would actually consider raising rates. And we've got the UK retail sales out today, and if that surprises on the upside, then we could see another spike up in cable. For the time being, though, the hourlies are overbought. They've come back off. We've come off quite hard, really, from this 164.85 high straight after the FOMC, and we're back down here at we're a big figure lower already. So we may have some more chopping around, but further out, we're sitting just above support here. Where's that support? It's for 163.30, and if that breaks, we might head back here to sort of 162.50 or so. But I suspect that as long as if we go further out, actually need to go to the weeklies really. As long as this support here holds, which is around 162.75, which is the top end of what was the previous channel that we were trading in. As long as that 162.75 holds, I kind of like sterling for a move higher, probably early in 2014. I wouldn't be too involved this side of the new year, but I think we're probably heading higher up to sort of 165 and then possibly up towards 167. but that's going to take a while. But I think buying dips does look to be the strategy. In which case, if we're looking at that, if we're looking at buying sterling and selling euro, the cross might be a decent play to look at. I'll come back to that in another video. Dollar Swiss, once again, that was all over the place after the FOMC. It's now headed up to 89.50. There's some reasonable resistance up here at 89.60, and if that gets taken out, then I think we're possibly headed up here to where's the next FIBO resistance? It's about 89.99 the figure. So the indicators they're building for some further dollar strength, and the dailies. Well, the dailies are a bit the reverse of the euro, really, and we may have seen a bit of a bottom. Now, I think we're trading in a long channel, a long-term channel in the dollar Swiss. May have seen a bottom. It's not out of contention that we could head back here towards this 88 low, 87.50, something like that. I don't think we're going to. The low here, that was at 88.30. We haven't seen 88 yet, but it is a possibility. I prefer to think we're actually going to head north and go back towards 90 cents. So that'll be as the euro weakens, which I kind of expect it to do so. The Aussie, well, that's in all sorts of trouble as usual. We've taken out the 20. This is the Aussie today. So let me just. That's the Aussie today after the Feds. Now we've taken out some important levels today. The previous low 88.40. We've 88.48. Sorry, we've taken that out. We've been down to 88.18. We've tested the bottom end of this channel. We're just about holding in it at the moment, but it doesn't look very flash to me. And if we do break lower, then I think my own personal target 87.80 is the base of the head and shoulders. We need to go to look at the daily to look at that. So that was the head and shoulders there. The extension target comes down here at 87.80, and if we go below there, the channel that we've been in, and I'll show you on the weeklies in a minute, that the base of that channel is at 87.50. So I don't think there's an awful lot more on the downside to come for the time being, and I'd be looking to buy back shorts, particularly before Christmas, if you've got some decent profit in it. On the weekly charts, you can see this channel better. It's traded it pretty well, really since the top up was 110, 105, and a break would take us down towards 85.5. But as I said, I think there's plenty of support down around here, and if you're not short already or haven't been short already, it's not worth doing so now. Particularly as the weekly momentum indicators are not really providing us with any sort of backup support. The Kiwi, I'd leave well alone, to be quite frank. It's also trading in a short-term channel, but it's very choppy. It's trading around 182. Where it's been for, I don't know, quite a while now. It looks offered when it goes below that. It looks a bit above it, and I think the daily charts show us that this the moving averages here around 81.65.70. That's the daily 100 and 200. They're supporting it. On the top side, well, above sort of 82.70, 83. I don't think we're going above there for the moment. The indicators are fairly flat, those daily indicators. The 4 hourlies they're pointing to another test of the downside, which if the Aussie hits lower, that might go a little bit with it. But Aussie Kiwi's taken a bit of a pounding recently, and that's currently, where's that, 107, 107.75 Aussie Kiwi. So the Kiwi's holding up reasonably well while the Aussie's coming under pressure, and that may continue to be the case with the Aussie, with the Kiwi sitting at around 82, the figure as a pivot. So that's about it for today. I'm looking really for more dollar strength, particularly against the euro and against against dollar Swiss, against dollar yen also in the long term. Although I'm not sure we're going too far today. We need the short-term charts to unwind. But that's about it. Later on, we've got the RBA quarterly outlook today. That shouldn't move the Aussie too much, but the pressure will remain on the downside, I think. As I said earlier, UK retail sales. We've got the EU current account, and then some US home sales and jobless data out later on. But that's really all for today. As I say, have a very good day's trading, and we'll talk to you tomorrow, which will be the last update before the new year. So have a good one, and talk to you later. Bye.